Hey guys, Rob Legenhausen here. Welcome to Fall Edition WorthWhile Magazine 2025. Guys, I want to take a few minutes to highlight a couple of articles in the magazine that I think you might enjoy, and then also talk to you a little bit about what's going on in the world, what's going on in the economy, and to remind you that I am extremely grateful for you, for your business, your relationship, your trust, and your faith that you place in me, my team, and my firm. It just means the world. So I want to let you guys know that I found a couple cool articles in here. The first one we're going to highlight is going to be on page 4. Looks like this. This is about the debt ceiling. So the U.S. debt. The thing I want to highlight with regards to the first article is interest rates. We just got a rate decline as of the date of this recording about a week and a half ago now, and we think we're going to get more of them. Lowering interest rates does a few things. Number one, in the short term, it boosts asset prices up. So like it's good for stocks. Generally, it's good for bond markets as well. And for those of you that have been in fixed income bonds, with us for a while, thank you for your patience. Those are finally starting to work. We weren't wrong. We were just early with bonds. And so now you see bonds finally starting to come back and behave like bonds. Stocks are up as of the date of this recording about 14% on the year. And so, but again, with regards to debt, when you have adjustable rate, the debt is in the form of bonds. Like almost all of it is these bonds are like debt instruments. So US treasuries, for example, when those come due, like a CD might, they have to renew into the current rate. And so if the rates are lower, you're going to re-up and do a lower interest rate. And so it's like if you had a mortgage and you're paying the bank and then all of a sudden they say, hey, your interest rate just went down. Well, that's good. That's good for you. Now you pay less interest. So that's what lowering rates by the Fed helps to reduce the amount of debt service that we have as a country. And that's a big deal because it frees up cash to do other stuff with. Last year, my friends, was the first time in history the United States spent more on the interest of our debt than we did the entire U.S. military budget. It was over $1 trillion. That's kind of like a crossing roads, in my opinion. And there's been a lot of talk. I've read articles about what we're going to ultimately do with all this debt. Something that I've read recently, which I can't really understand it, but I'll tell you what I read. It said something about the administration is considering moving the 35 trillion of debt to what's called the crypto cloud. I don't know what the crypto cloud is. I don't know where it resides or what that actually means. But once the debt goes into the crypto cloud, then you can do something with the dollar because the dollar backs the type of crypto that they're going to use, and then it's going to boost the dollar, and then we maintain the world reserve currency, and then you can essentially wipe the debt clean in the crypto cloud. So that more on that to come. Again, this is just theory. But I've read multiple things. I've read this in Barron's, which is a highly respected, financial publication. I've read this in the Wall Street Journal. So again, interesting to see what the hell they actually end up doing with all the debt, or what the crypto cloud actually means. But they're kicking it around. So lower interest rates, good for us, good for our clients. Next article looks like this. It's on page 14. This is an article about the arts. It's about music specifically. They didn't highlight Lil Wayne in the article, so I just moved on for me. But in all seriousness, it's a nice article about the classicals, and it talks about different eras, different time periods of vintage music and how it sort of evolved over time. Kind of interesting. I'm still a Lil Wayne guy, but classical music is still cool too. Okay, finally, go to page 20, please. 20 looks like this. And this is an article about dividend-paying stocks, which is kind of the blocking and tackling of what we do here, at least on the equity side of things. The article does a great job of talking about just kind of basic, like 101, what's a dividend paying stock? It's an investment that you have price appreciation, on the growth of the, underlining, price of the security, but then you also have this passive income that's generated in the form of quarterly dividends, sort of like if you had a piece of rental property. Now, I've used this example before with some of you guys, but if you bought a rental property for 500 grand, the first thing, you're going to look on Zillow and say, oh, it went to 600 grand. Cool. So I made money. That's like the market. Like you look at a stock, it's up or down today. But then you also have a tenant in there that's paying you every month. And so that helps to like mitigate volatility, because if the market's down, well, you still have the income to kind of prop up the total return. And so that is sort of like a dividend from a company is similar to a tenant paying you a monthly rent. So again, you have both sides. You have growth, the price appreciation of the stock, and then you also have income, which is going to be in the form of a dividend. So check out that article and the others that we highlighted, guys. If you have any questions about anything we talked about today, anything in the 3 articles, anything else that you read in here, let me know. Guys, we've met with all of you multiple times, some of you over the course of the year. We're going to be doing a Q4 blitz to get each and every one of you guys back into the office before the end of the year. We're going to be talking about year-end planning. We're going to talk to you about any potential tax loss harvesting, where it makes sense. And we're going to talk to you also about, if for those of you that are in RMD status, we manage your required minimum distributions. And so we'll be talking to you guys about that as well. Thanks for hanging in there with me, guys. Went a little bit longer today. Enjoy this weather. This is why we live in Florida. Enjoy the next month, month or two of good weather we'll have. And if there's anything you guys need, please let me know. We are here for you. Take care. Have a great day. Until next time.